Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis of Mastercard, ticker MA. Reason for this is it did close up 9% on Friday, as they did recently release their earnings. We were going to start from the daily chart, see if there's any gaps that need to be filled, but there is no really obvious gaps. So we'll go straight over to the standard deviation chart and start looking where would we start looking to be short, long, and kind of what targets we're looking at. So as we can see, looking at Mastercard, as that on the 4 hour, we've already broken above our second deviation, and going onto the daily chart, we can see we're coming very close to the second deviation. Now it means that we're kind of looking at more short bias on Mastercard. Reason for this is that if you understand standard deviations, 68% of data is going to be between the golden lines, 95% of data is going to be between the blue lines, and 99.7% of data should be within the green lines. So knowing this, once stocks come into the kind of that second and third deviation, we tend to try and catch that reversal play. And seeing that the second deviation is at $376 and $385, these are going to be kind of our first short locations where we're looking to be short bias on Mastercard. Obviously, if you're long biasing, you use these as targets, and obviously depending on how you trade, you may use these levels differently, but these overall are levels where we expect selling pressure to start kicking in, and we wouldn't be surprised to see the stock push down. So really, the main levels we're looking at are going to be the 175, the 375, the 385, 392 and 402, because these are all our deviations. So these are all levels. If we do continue higher, they're the next level that we expect to push down. And again, maybe if you're already long the stock, these are areas where you could be looking to lock in profits, with the final lock-in profit probably being around $402, because from here we would be very unlikely to see Mastercard above there, at least for the time being. What also adds conviction to our downwards or short bias play of this is that you can see these standard deviations are still facing down, which does show us that the majority of data and that Mastercard in general has been more weak trending and downwards trending in the past 180 days and year, because it's downtrending on both the 4 hour, which is the 180-day chart, and also for the past year, as that's the daily chart. So yeah, really we're short bias. And then where are our targets for this? So 168 would be that first target. Really, we're only going to be using that target if you're day trading. If you're looking at swings, it's not really going to provide enough upside, as we can see from current price. It's really only going to provide around a 3.5% profit. So that's more of a day trading level that we'd be looking at. From swing trades, we'll be looking from around the 360 mark, which is the first deviation on the 4 hour, as that's going to provide a good amount of upside. And then so 360 is going to be that first kind of key target that we're looking at. We may look at a little bit of profit, and move our stops to at least break even. And then looking a bit further down, we're going to have our final target, at least on a short bias way, at $352. Now, why is this our final target? Because stocks will always try and reverse to their statistical mean. So we tend to trade to wherever the closest statistical mean is. We can see on the 4 hour it's $144, but on the daily it's at $152. So that's where we're going to try and trade it towards. So from current price around 383, we can see that to our key and final target, it does provide around a 7.5 to 8% profit target. So that's really going to be our final target. If we're short bias, that's where we'll look to kind of get out of that position. And then when we start turning more long bias, well, that's when we start coming into the first deviation from the downside. Especially in this market where we're being a lot more volatile, a lot more stocks are moving, we are kind of staying away from these first deviations. The reason for that is there's going to be other stocks in the same kind of industry or sector which are down by the second or third deviation, so we can trade those, and usually they'll provide less risk and actually more upside. So really though, any of these targets, if you are looking to get long, these are kind of where we'd be looking to get it from, 318, 311, 295. And again, if you are short bias and you're holding past statistical means, then you can start using these levels as also targets to be locking in profits. Also, what's nice to see as well with Mastercard is obviously as we are quite, at least right now, kind of more short buyers on it, we're seeing the deviations face down, which gives us more confidence to short. And then we're also seeing a divergence. For example, if you're looking at the 4 hour, you can see a divergence has formed from this high. As you can see, actually it's more of a double top, but either way, the momentum is diverging compared to price, so it is showing that this move is kind of weaker than the previous one, which again can help signal a reversal. And we are obviously kind of having a divergence on the daily, because overall it has actually diverged, but we tend to only like to use it or classify it as a divergence if it's gone to the oversold category or overbought, depending on obviously if you're looking to be long or short bias on it. But either way, it is starting to show divergence also, which is nice to see when it's something that we're either looking to lock in profits on or starting to trade the reversal. So I hope you enjoyed the breakdown on Mastercard. If you did, don't forget to drop a like and subscribe if you haven't already, and I hope to see you in the next one. That's it. Peace.
I go dumb for that money, dumb for that money. Profit